I wanted to talk to you about expansion potential in terms of mining rigs themselves, these script miners. Any targets for 2026, or what is your total capacity? And then building on the point you just mentioned about this pivot to HPC AI, will we ever see a space or a time where you guys are looking to actually own the data center itself, run GPUs, or is this a little bit far out of sight at this point?
Yeah, good question. In terms of our co-location size right now, we actually have four co-location sites distributed amongst the US. And we did that on purpose. Obviously, every single load zone within the continental United States is very different, right? You're playing both the wholesale markets and the ERCOT grid, MISO grid, Georgia Power. Obviously, all of that power demand modulates a lot differently. So we didn't want to concentrate in one location. And we actually, because of us doing that, it's allowed us to maintain a 95% operational uptime with our existing footprint, which I think is really competitive in the industry. And when we think about our capability to scale in the next 12 months and looking forward into 2026, we actually already have a deposit down for another 1,000 next generation script rigs that no one in the world actually has access to in scale yet. So once we get access to those, we're going to be the highest efficiency metrics in the space, and we'll very quickly be able to deploy those at scale. We have plenty of access to power, so we're not really worried about that going forward, especially because of our scale. We're not competing with the hyperscalers or TeraWulf or Riot. Like, we're not competing with the big guys. We kind of think of ourselves as a little barbarian at the gate, and we're able to be very opportunistic in the power markets, able to scoop up 10, 20, 30 megawatts here and there, where that previously might have been overlooked because a lot of the hyperscalers are laser focused on gigawatts now, seemingly not megawatts. And when you think about, as we're pivoting into what we want to kind of be doing in the future and what we want to be looking to in the future, we're not interested in doing greenfield development, because obviously the market is rewarding the people who are actually deploying IT compute at scale right now and actually getting it online. You see, obviously, the larger players like Core Scientific, CoreWeave, they're starting to get punished a little bit because simply they're just not being able to upsize into their current projections. But the guys who have compute online, like TeraWulf, they're getting very well rewarded with bringing some form of compute online. So with our cash balance, we're looking to find fully bought IT load and IT compute. And what we're recognizing, and there's a fundamental shift that's going on right now between the private market valuation for these companies and these builds, and the public company multiples for these builds. And we think that we can kind of serve as a really decent opportunity for us to potentially roll these things up and find the smaller projects that are online, hashing, has a client. And as you know, these long-term AI HPC clients are more of like a 10 to 15 year term. So what happens is these developers are really looking at it from like a project finance perspective. So they effectively do these builds, get someone in there, and then they essentially try to roll on to bigger and better projects to keep up with the insatiable desire that exists in the form of the hyperscalers. So for us, we think that we can look opportunistically into the private markets and purchase these companies that are already running IT compute at scale. And we can probably pick that up for a discount and then get it re-rated in the public markets. And then more importantly, again, if you look at the public markets, you recognize that there's an insatiable demand for these projects right now from the debt capital markets. So a lot of these larger hyperscalers are looking at these debt notes and getting 0% coupon notes, low coupon notes. It's absolutely crazy. But in the private markets, these smaller developers, in order to bring these sites online, they have to deal with relatively predatory debt notes. So from our perspective, we think we can come in, purchase private AI HPC companies, re-rate them into the public markets, and then also take a look at their cap stack and their debt structure and potentially recap their debt and immediately turn those IRR projects that might be showing like a 7 to a 9 handle. we think we can convert it to like an 18 to a 20 handle. So simply by looking at that private to the public market play and looking at the size that we're working with, we think that we can take our cash balance that we're currently sitting on, move into that space at scale, and immediately start to throw off EBITDA for the shareholders.
Yeah, that's awesome. Well said. And we talk a lot with the HPC AI data center companies on this channel. And you're right, that seems to be the best value or revenue generation per megawatt at this point in time.